Here you go, Gully. You got that lower bid, and we are going to be trading this 25.50 call. We have the NASDAQ futures are only gapping down slightly. However, the 25.50 call was marked up 4.5. It had a close, and it's a weekly. It's a 622. Yes, it is. It's a shake and bake in about 13 minutes when the market opens up. Volume was only 14. They've only been open 2 days, and they're a weekly. So we want to be very clear that the 25.50 put, we're going to take a look that was marked down $15.22, but the last print was $28. Look at here, $43 was the close, but the high was only $37. They marked them down on the open. The range ended up being $9 on the intraday level, on the markdown. So here's your markdown. Now, what we're going to take a look at carefully is how the 25.50 put would gap up in the ratio value on the open, with the lighter on balance volume gap down on the opening bell in 12 minutes. And how to trade. So this side was marked up, this side is marked down. MMTs, you're going to watch the lower end of these bids down there when this thing, and we're going to watch that lower end of that bid down there between, let's say, 32.50 and lower at different price alerts on the 25.50 call, here and now, live, before the fact. The put premium right here on the 25.50 is how much premium of the price where that closing print was of $28, marked down $15.22. That means that the put side of the market is at the lower end of the price. Honk, honk. And you have grease and everything going down right now, because you do. However, that is a cover-up story. The real problems are those yields around the world are out of whack. So Spain and Italy are really the problem, as we've always said. And in the shorter term, that there's always a cover-up story. However, there is a gap up. S&P futures are only down 7 handles at 1330.50. Dow Jones futures going into the opening bell minus 69. NASDAQ futures 25.55 down 8.5. 8.2 handles, somewhere in there. So the gap open up and is not there. It's the gap open down, but it's diminishing. And the news that's rippling through the world right now in the financial system is playing its emotional role on who? The bigger money. And we're going to be here to make markets. So once again, it's going to be about how that premium from $28 print now, how much premium do they give that on the opening bell? So we're going to set an alarm, rises to 31.90 and 34.70 rises to. So we could tell those price ranges when they go up there, and we're going to open up in 10 minutes, and that's on those 25.50 put now. Okay? And let us not forget that 1325 call index option. Let us not forget that 1325 put on S&P. It's all S&P 622, 1325 call and a shake and bake with the 1325 put. Let us not forget that the even point on the year in the trend between the bull and bear are neutral on the S&P, right around that 1333 handle. And we have a 1335 calls. All this call was marked up 485, and that 1325 put was marked down 425, and that 1325 call on Friday, you can see how they marked that one up $5.8. So that means that the short-term price fix is that we're not gapping up, but we were already inflated on the call side of the market, and the put side was deflated going into the Monday morning opening bell in 9 minutes. So all eyes and all shake and bake right here in these price ranges on the S&P 500 index options for those MMTs that are in their certification program as a market maker within the index component. That is what you're going to be focusing on right now. And how does the public news play in to all of these premiums? Okay, so basically the Apple, hey, we're right here, shake and bake, down to that wholesale bid on that 575 call. In about 8 minutes, it'll be firing off. 560 was the low. We got alarms below the floor. Let us not forget the 570 call, low 810. They'd marked it up. It didn't have a whole lot of premium. Look, that's why you got to be in at the lows so you can get that range of 270. Say you get $2 of it. You're doing fine. That's a shake and bake right here on that wholesale bid. We have price action alerts ready to roll. And it's a 300 penny ratio gap down in that Apple. Here, I'm concluding the pre-market, and I'm concluding right now that all of the news is going to have a public emotion. And they're going to react to it. And when the sellers clear out of the left elbow gap down, we will look for bounces, but they only may be 3 to 5 teenies off of the bottom. That would be extreme weakness in the overall movement with the public, and we'll see. Lower on balance volume is in the tape, so when that is working and there isn't any sellers down below there, that's why they bounce and take off to the upside. However, benchmark the script with 3 teenies, 5 teenies, and do you get a 7 teeny breakout? And if a teeny is like 80 cents, well, 7 times 80 cents. Do the math. It's over a $5 breakout. So 25.71, and we're going to be watching the for the volatility trade. We're going to be watching this $2,600 call as well on the NASDAQ 100. I'm going to conclude it. I will see you there in 6 minutes to the blast off.